Bitcoin is a digital currency that allows people to securely send money over the internet. It is based on blockchain technology, and is encrypted so that it can't be stolen or copied. Unlike traditional banks, it has no central authority, and there are only 21 million Bitcoin in existence. Its volatility and high electricity consumption have earned it a reputation as a risky investment, but its potential for revolutionizing money and finance is significant. Its global The cryptocurrency revolution has opened the door to a more open financial system. Cryptocurrencies enable people to securely send each other digital money over the internet without relying on existing credit cards, banks, or payment processes to verify and process the transactions. Unlike traditional credit card networks and companies like PayPal, Bitcoin is owned by no one. Instead, it is a decentralized global network that anyone can join with a computer and an internet connection. Because of this, Bitcoin's transaction fees are much lower and its processing times faster than traditional banking methods. This global connectivity also opens new economic opportunities for businesses. With Bitcoin, a company in India can instantly and easily do business with customers in the USA or Colombia, or anywhere else in the world. This is a huge change for companies that were previously constrained by local infrastructure and limited on ramps to global commerce. In addition, cryptocurrencies are a way for individuals to protect their wealth against the effects of inflation. Because of their capped supply, they are less vulnerable to hyperinflation crises like those in Weimar Germany or Zimbabwe. Some investors even refer to them as digital gold for this reason. But perhaps the most important benefit of cryptocurrencies is their ability to bring financial services to those who have been left behind. Currently, 1.7 billion adults do not have access to formal banking systems, which means they are financially excluded. However, the cryptocurrency revolution has paved the way for innovative solutions to this problem. With advanced security features, low transaction costs and fast processing times, cryptocurrencies offer a viable alternative to traditional fiat currencies for people living in underdeveloped or unstable regions of the world. They are also a great way for individuals to send money to friends and family around the world without incurring exorbitant wire transfer fees. It's free. Bitcoin is the first digital currency to remove the need for trusted third parties in financial transactions. This frees up money for people in places without banks and allows for faster and cheaper global transactions. The blockchain network also records all Bitcoin transactions in a public ledger that is impossible to tamper with. The cryptocurrency mining process also provides an opportunity for users to earn new Bitcoins for free by solving complicated math problems. However, the blockchain network is incredibly energy-intensive. According to the University of Cambridge, cryptocurrencies currently consume over 100 terawatt-hours per year. This is more than many countries use in a whole year. Despite these issues, Bitcoin is still very popular. In fact, its popularity has inspired the development of thousands of other cryptocurrencies. It has become a benchmark for the crypto market and continues to influence the world of finance. The value of a Bitcoin is determined by supply and demand. When more people want to buy it than sell it, its price rises. This is a basic principle of investing that applies to any asset. However, the value of a Bitcoin can be more volatile than other assets. In addition to buying and selling Bitcoin, users can earn passive income by using their computers to verify other transactions on the blockchain network. This is called staking, and is a common way for people to invest in cryptocurrencies without purchasing them directly. Scammers often request electronic forms of payment such as gift cards, money orders, e-transfers and cryptocurrency because they require no in-person interaction, are difficult to trace back to the scammer and can be sent from anywhere in the world. This makes them a perfect medium for criminals to receive large amounts of money without fear of detection. When scammers ask for payments in cryptocurrency, it is a red flag that you should be suspicious. It is highly unlikely that a government, authority, financial institution or reputable business would ever request payments in this form of currency. If you are asked to pay a scammer in cryptocurrency, contact your local police department immediately. It's secure. While cryptocurrencies like Bitcoin get all the hype for their roller coaster prices, the real reason they're exciting is that they represent an entirely new type of money. As a currency that's native to the internet, Bitcoin allows people from all over the world to transfer value between each other online quickly and securely, without a central intermediary such as a bank or credit card company. This opens up a whole new range of possibilities for how people use money, from sending remittances to developing countries to financing businesses and investments. Bitcoin's security is built on a distributed ledger called the blockchain, which records every transaction in a public fashion that everyone can see and trust. As transactions are added to the blockchain, they become permanent and can't be altered. This system is incredibly resilient, able to withstand large-scale hacks and other attacks. The blockchain is maintained by a network of computers known as miners, who use their computing power to add verified transactions to the ledger. It's sort of like a constantly updating book that anyone can inspect, but that no one person controls, and the fact that it's publicly accessible helps foster trust in the system. There are some risks to this openness, though. Because all Bitcoin transactions are recorded on a public ledger, it's possible for someone to track your spending and learn what you're doing on the internet, although they can't take your funds, which are stored in a wallet that's uniquely linked to your Bitcoin address. However, this risk is more of an issue with today's overabundance of web tracking, and if anyone really wants to blackmail you, they could simply sell your wallet information to data brokers. Bitcoin is a digital alternative to traditional currencies that's becoming increasingly accepted as a form of payment online, in stores, and even at some restaurants. Its proponents argue that it has the potential to wrest control of money creation from banks and Wall Street while also empowering people to spend what they want on things they value. Critics, meanwhile, warn that cryptocurrencies are magnets for criminals and terrorists, cause extreme market volatility, and consume vast amounts of electricity. It's revolutionary. When the creator of Bitcoin envisioned his or her virtual currency in 2009, the idea was that it could be used to conduct transactions without the need for a central authority. Cryptocurrencies like Bitcoin allow individuals to bypass the involvement of third parties in financial transactions, which can reduce fees and increase transaction speed. These benefits have led to a surge in cryptocurrency adoption that has seen digital assets move from the fringes of finance to mainstream applications. In fact, even central banks are now exploring the potential of launching their own central bank digital currencies, CBDCs. The blockchain is what powers Bitcoin and many other cryptocurrencies. It's a record of every transaction that occurs using Bitcoin, much like the ledger in a library that keeps a catalog of books and their ownership. The key difference is that the blockchain is a distributed network where no single entity controls it. Instead, the blockchain is constantly verified and maintained by a wide range of computers around the world. It's like a network of librarians working together to keep the ledger up to date and secure. This decentralized approach means that anyone can use the Bitcoin network to verify and approve transactions. It also allows the Bitcoin network to scale, which is essential for global adoption. In addition, the blockchain is immutable, meaning that once a transaction is recorded in the blockchain, it can never be reversed. This is unlike the reversibility of credit card transactions or conventional online payment systems, which can often be reversed months after the original purchase is made. Another key aspect of Bitcoin that makes it a new type of money is its limited supply. There will only ever be 21 million Bitcoins in existence, which gives the currency a scarcity value that can help protect it against inflation. This feature has also made it attractive to investors who see it as a store of wealth, a potential hedge against economic uncertainty and a way to preserve their savings. For those living in developing countries, where access to banking services is restricted or costly, the Bitcoin revolution offers a chance to participate in global commerce at a fraction of the cost of traditional methods. This opens up new opportunities for businesses to tap into a global customer base while avoiding currency exchange fees and international transaction costs.